Hello and welcome, folks. All right, so we are getting ready to go live right now onto YouTube. Welcome in. Here we go. Let's make sure that all of this is working. And hello, welcome everybody on the Zoom webinar and welcome everybody in the YouTube world. I'm going to go ahead and get my screen, whoops, there we go, silence our phones before the webinar gets started. That would be ideal. All right, so folks, what we are going to do today is we're going to be talking about business credit scores. And really, there's actually a lot more than you may think. And we're going to talk in depth about why this is actually important and what you can do about it. So let me go ahead and share my screen. That way you can see the presentation that we're doing today. All right, there we go. Now, so how to understand business credit scores and leverage your business credit profile to get the approvals that you need. You can always find out more information by going over to wiseguysandties.com or giving us a call at 888-524-9273. All right, so what we will cover today is the 5 credit scores that are associated with Dun & Bradstreet, how do Experian commercial scores work, also how to build your credit with Equifax, which is something that's a little bit difficult to do, a lot harder than the other 2 bureaus. What your FICO SBSS is and how it's the key to securing small business administrative loans. Also, we're going to talk a little bit about how to control all of your commercial scores and why you'll have failing scores with no credit. First, let's dive into this. This training is for you if you have just started out and you aren't even sure if your business has a credit score. Also, what if you've been in business for a while and you have been getting reports, but you're not sure what all those numbers mean? We're going to talk about that today. This also is for you if you're having great business scores is important to you, if you're looking for funding, if you're always trying to figure out how to grow and expand. Also, what if you're looking for a business, if you're looking for business money and you're just set and determined to get your business scores back up and running, and that is the only thing that is holding you back. Or this training is for you if you want to get the most money at the best terms, because when we talk about terms, it all comes down to risk. If you reduce your risk, you will reduce your terms. So you'll get better interest rate, you'll get longer payment periods, better rates. Now, for you folks that are new to this, what is business credit? Business credit is a credit in which it's attached to the business's name and the business's tax identification number. This is not tied to you as the owner, your personal credit score, your credit worthiness, or your social security number. Instead, business credit scores depend on how well a company can pay its bills. Consumer and business credit scores can vary drastically, dramatically, because there's a lot of things we understand about personal credit and we associate a lot of those with business credit, but it's just not the same. And that's what we're going to cover today. So understanding your business credit scores. Your business credit scores can be the difference between getting business funding and not getting the funding you need. So business CRAs, so credit reporting agencies, record how fast your business pays your debts. Let me say again, how fast. There's a speed component to this. Your business is paying its debt. The idea is to predict how likely your business is to pay its bills or to stop its operations. Understanding these scores is the first step to improving your chance of getting funding. Let's talk about Dun & Bradstreet, which is the largest business credit reporting agency. Dun & Bradstreet has 5 main scores. The PAYDEX is the best and the well-known. We talk about it a lot. There are 4 others. There's the D&B Rating, there's the Delinquency Predictor, there's the Financial Stress Score, and there's the Supplier Valuation Risk Rating. And you're like, whoa, Ray, you guys don't talk about this stuff a lot. Right, we usually focus in on PAYDEX. Today, we're gonna go a little bit deeper and build on that foundation. So a business will not get a PAYDEX score unless it has 3 trade lines reporting and you've also received a DUNS number. Now, if you have been in business for a long period of time, you may have a file that's already been started with Dun & Bradstreet, but there's a good chance you don't. You're going to have to actually go through the process of getting a DUNS number. And a business must have both to get a D&B score. You both are going to have a PAYDEX rating, which is at least 3 trade lines account reporting, and you're going to have that DUNS number. What is the PAYDEX score? Well, this is Dun & Bradstreet's dollar-weighted numerical rating of how a company has paid its bills over the last year. Dun & Bradstreet bases this score on trade experiences reported by various vendors that you have. The score ranges anywhere from 1 to 100. The higher in the scores means the better payment hit performance. Really, ideally, we want to see that you have an over 80 PAYDEX. Really, when you start to fall below 78, that's when we really see those denials. PAYDEX scores reflect how well your company has paid its bills, and larger bills, so having a $10,000 line, will weigh on that score a lot heavier. So you want to start to increase those limits as fast as you can. Now, the D&B rating, let's talk about Dun & Bradstreet bases this rating on the company's net worth. That's based on financial statements, as well as the company's overall condition. If a company's financial statements are not provided, the score is based on the company's size, the industry, and other related factors. This is important to understand because if your company doesn't provide information, Dun & Bradstreet will base its scores on whatever information it can find and other related information to that industry. So it's very important if you're looking to grow your score that you get on top of this. Don't just wait for them to pull the data for you. And a company will get a lower rating if no information is provided. They could have information, they could have misinformation, they could have, I see it all the time where they maybe have a manager and not the owner. They have an old address, not the new address. They have a mailing address, not the actual location. So many issues can pop up because their data collection, if you don't provide the correct data, they could have the wrong data. Let's talk about the delinquency predictor with Dun & Bradstreet. This score runs from 1 to 100. Higher scores, the better. Very similar to the PAYDEX. Now, it's a predictive score, only represents the statistical probability, not a guarantee. The scoring system ranks the amounts based on the probability of late payments. So you see that there's a trend here. Most of these scoring models are mainly just payment history. Payment history is so crucial. Are your payments on time? Are they early? Really, you want to make sure that these payments are always coming in early. That's how you're going to be able to optimize your profile. But a new company has no historical information. So what do? Well, the score is going to look at proportions of slow payments in recent months. If you have brand new credit, it's very important to stay on top of that you are really determined to make sure that you have nothing even close to late. So there's no past due balances. The total amount owed is paid. Higher risk industries are going to be based on delinquency rates from the industry. That's why we're going to go over, some of the restricted industries, but it's crucial. If you're starting out, you are going to be associated with other businesses in your industry, and they're going to be using that as a prediction model. So you can also increase the proportions of delinquent payments in recent payment experiences. And there's evidence of open suits. So they're going to be looking at all the derogatories. They're going to see if there's anything in there. And if you don't have anything, then they're going to actually look at what's the likelihood of just businesses in that industry. So that's when we start talking about high risk industries. It all trickles back down to the delinquency predictors in the credit bureaus, because the lenders are going to be looking at, hey, what's the delinquency rates of these industries? And that is why it's a lot harder to get funding for those high risk industries, is directly correlated to the delinquency predictor. Oh, so that's why we talk about growing a healthy profile can overcome a lot of these weaknesses. In the beginning, if you can stay away from it, putting a high risk industry name in. But I also talk about, hey, you've been in business for a while and you have one of those quote unquote red flag business names. Let's make sure we can build it up in your strengths up in other areas. That way we can overcome any of these weaknesses. Let's look at your financial stress percentile. The percentile runs from 1 to 100. 1% is the most likely to fail. So very similar. closer to 100, you're doing much better. The closer you are to 1, the worse off you are. It is a comparison to other businesses. That's very interesting because we're also looking at industry type. Now we're comparing other businesses in your same industry, and it's based on a much higher raw score, the financial stress score. Oh man, folks, I'll tell you what, it's one of these really tricky situations because as you start to move up into accessing SBA loans, unsecured financing without using your personal guarantee, they're going to start to weigh these other factors like the financial stress percentile a lot higher. The financial stress score. This score runs from 1001 to 1875. 1001 represents the highest probability of business failure. So it's kind of interesting. They want to separate themselves. It's still a very similar, like, 1 to 875, but it's in the 1,000 range now. So low proportions of the satisfactory payment experiences to total payment experiences. You got to also have a high proportion of past due balances to the total amount owing. The UCC filings reported, also high number of inquiries to Dun & Bradstreet over the last 12 months. These are all going to basically hurt your score. The score compares the company to similar businesses in the D&B database. So when you have, now we've talked about this before where inquiries and things don't necessarily matter. There are some weighted models that have this. Now, these are not primary. These are going to be secondary really scoring. There's going to be specific industry, specific times that these scores are going to be pulled. And to find out really more about that, I recommend you reach out to us. Go to wiseguysandties.com, set up a consultation. We can talk about how these scores come into situations that you are going to be facing. There's the supplier valuation risk. And so that's a scale of 1 to 9. 1 means the company is less likely to fail to pay its own suppliers, or it's the least likely. So in this case, you want to have a low score. So factors affecting your supplier valuation score rating. Negative net worth. So having more debt out on the company than what your assets are. Proportion of slow payment experiences to the total number of payment experiences reported. So really having more negatives than positives. Business belongs to an industry with an above average risk. And let's, for example, say that a marketing company versus auto sales. Auto sales is going to be a much higher risk. So this is going to affect the supplier valuation score. Let's talk about the maximum credit recommendation. This includes recommended dollar guidelines. D&B performs an overall assessment of a business for the next 12 months. They also check the predicted risk of a business discontinuation. So everything is based off of, are you still going to be in business? Are you going to be able to pay your bills? Further, they look at the predicted risk of severely delinquent accounts. D&B also will base its dollar guidelines amounts on the historical analysis of overall business risk. And a recommended limit is based on the probability of severe delinquency. But this recommendation is no guarantee that the business can cover the recommended amounts. When you are getting into the business funding aspect, you're going to notice that it increases on limits. They will continue to give you more and more money as you can support that debt. A lot of times, a new business with very little revenue could have access to $100,000, $200,000, and it doesn't have necessarily the financial ability to service all of that debt if it was used at one time. Now, this really factors into the maximum credit recommendation. This is a huge difference, though, between personal credit, because on your personal side, there's a cap to your personal credit. They only want to extend you so much, and they get more nervous as they extend you more. Businesses actually want to continue to extend you. They really are going to keep pushing the limit on how much money they can give you. That's one key that is so beautiful about building business credit. Now, other than Dun & Bradstreet, there's also Business Experian, and Business Experian has its Intelliscore. This ranges from 0 to 100. This is it's a percentile score. So 0 represents a high risk, very similar to the PAYDEX, where 100 represents very low risk. So the same thing, you want to be over 80% with your Experian Intelliscore. It reflects the percentage of businesses scoring higher or lower than that specific business under review. So once again, we're starting to get compared to other businesses. It's really kind of the same way that personal credit works. You actually are getting compared to other people, and that's how they came up with these baselines. Businesses, there's not necessarily a set baseline that's been prepared like a personal credit has, so they have an ongoing comparison as industries and current market situations change. So many large financial institutions around the world use this. So do over half of the top 25 PNC insurers. Very important, because also, just like personal credit, it affects your insurance rates. Most major telecommunications and utility firms. Industry leaders in transportation, manufacturing, technology are also known to use the Intelliscore as their primary risk indicating model. So it's important to understand that not only do you need to have a good score with Dun & Bradstreet, but also you need to have a good score with Business Experian and Equifax Small Business. So let's look a little bit more at Experian Intelliscore Plus, because that's a little bit different than the normal Experian Intelliscore. This is based on payment history, very similar to the PAYDEX in that range, 5 to 10% of your total score. Current payment status, so trade balances, percent of accounts that are delinquent, that makes up 50 to 60% of your Intelliscore. Also, credit utilization, and you're like, whoa, credit utilization, that sounds like personal credit. Yes, in the Intelliscore Plus, credit utilization is a factor of 10 to 15% of your score. Your company profile, your age of businesses, industry risk, and size of businesses by number of employees is 5 to 10% of your total score. And derogatory items such as liens, judgments, collections, and bankruptcies, those have a 5 to 15% factor in your score. So this is important to understand, because this model is not always used. This is going to really come in effect in some higher end lending. And so when you're just starting out, this is one of those things that you're going to not have a lot of these aspects built up yet. So they're going to go with more of your Experian Intelliscore. As your company starts to get on employees, then you're going to have to start dealing with some of these other factors. But it's very important to understand that. And there's also the Intelliscore Plus. Let's talk. So as we talk more about the Intelliscore Plus, I'll tell you about this. Has more than 800 different factors. These affect your business credit scores. Scores are assessed on the millions of businesses in the Experian database. And it's a percentile score. This predicts a business's risk of going seriously delinquent. You can see that track record that's taking place. All this is based off of risk. Are you going to be able to pay over 91 days late? Are you going to be having a major financial issue like bankruptcy in the next 12 months? They're going to do their best job of being able to predict that. Now let's look at the Experian Financial Stability Risk Score, or FSR for short. This is a percent score on 1 to 100, 1 to 5 risk classes. So the risk classes put businesses into risk categories. The highest risk is in the lowest 10% of accounts. You can go over to Experian.com. Here's the link. We'll get that for this PDF in the description of this video afterwards when it's up on YouTube. But a score of 66 to 100 and a risk class of 1 means that there's a low risk of default or bankruptcy, but a score of 1 to 3 and a risk of, if you're in risk class 5, means that there's a high risk of default or bankruptcy. So we talk to a lot of clients that you're just starting out, maybe they want to gain access to $50,000 in their first year, but we also have clients that are doing multi-millions of sales and revenue each year. This is going to become, if you're doing over $10,000 in revenue, you're looking at accessing some huge lines of credit, some access to some SBA loans. We're going to need to sit down and really look at optimizing your Experian Financial Stability Risk Score, because this is when it really starts to get into the big bucks and how you're going to get the best terms. So the FSR also predicts the potential of businesses going bankrupt or defaulting on its obligations. The score identifies the highest risk businesses by making use of payments and public records, which include delinquent payments of 60 or 90 days plus, high utilization of credit lines, tax liens or judgments, collection accounts, risk industries, short term, and having a short time in business. That's looking at more of your capacity, being in business for a long period of time. This is something that can be a big problem. You've been in business for 10 years, but you've put off building your business credit. Unfortunately, you got to go through this process of making sure that these accounts are established, they're grown, and that you are putting them in the right places at the right time. Let's take a look at the Experian blended score. So this is basically taking a summary of all the information on the business and the business owner. For troubled businesses, blended scores dropped an average of 30% over the 4 quarters leading up to quote unquote bad event. This was a very, very strong predictor of financial problems. 53% of the time, the first signs of credit problems were on the business credit reports. 46% of the time, the first signs of credit problems were on the owner's personal report. Blended scores have been found to outperform consumer or business alone by 10 to 20%. Well, let's think about that. Just what is the blended score? This is something that incorporates your personal credit situation and also your business credit situation. So you're actually going to need to really make sure that both are in good shape, because many folks, when they're starting a business, we end up using personal credit to fund our business. A lot of times before we get business credit, we are maxing out or utilizing personal credit. So this is going to look at both sides. Have you recently started to ramp up the credit usage on your business side? Have you recently started to ramp up the credit usage on your personal side? Because those can be key factors, not always, but there are some new lending products that are going to be looking at the Experian blending score. And I always recommend, depending on how you want to go get funding, because all of this matters on the type of funding that you are looking for. Reach out to us. Go to wiseguysandties.com. We will do a free financial blueprint. We'll look at, hey, what's your cash flow? Do you have any? Yes, no. Do you have any collateral? Yes, no. Do you have personal credit that we're going to be using? No personal credit. Do we have business credit? Whatever that situation is, there's these major factors. We talk about the 3 major factors all the time: cash flow, collateral, or credit. Credit can be broken down to either your business credit or your personal credit. And then there's also capacity, your ability to pay back, how long you've been in business, and your character. Are there issues with the way that your business has been set up? But whatever your situation is, reach out to us. Let's go through a financial blueprint. Let's see what kind of funding is available out there. And if there's no funds out there, then let's talk about how we can turn your situation into a situation that is fundable. That's what we're here for, folks. Let's talk about DeFellis and Thelma Sample. They own a company out of LaPorte, Texas called Success Tax Relief. They went to their bank to get a business line of credit and they turned them down. Then they got started with the business credit advisors and building of their business credit. After following the steps, they've now secured over $96,000 in business credit cards and just applied for the Platinum American Express, got approved instantly with no limit. Now they have 4 to 5 different companies calling them each and every day, trying to give them money, and that's a great problem to have. If you do not have business credit, you got to jump on this now, because when you start having money being thrown at you, that is going to be a game changer. Let's talk a little bit about the credit risk scores as far as what the key factors are. They're looking for the evidence of non-financial trades every cycle. They're looking for delinquents. They're looking for charge-offs. They're looking for the length of time since your oldest financial account was opened. If it's been open for a long time, that's going to be a lower risk. Available credit limits on your revolving trades, that's going to be offering you a lower risk. Your company size, number of employees. So is it just you, or do you actually have 20, 30 employees? You're going to have a lot less risk when you have 20 or 30 employees, because the layoffs that need to take place before something massively happens in the company is much lower. Small business failure risk score. This score runs from 1,000 to 1,880. Higher scores means the business is less likely to fail. Now, what is this looking at? This is looking at your payment index. This is over 90. Over 90, you're paying as agreed. 80 to 89, you're 1 to 30 days late overdue. 60 to 79, you're 31 to 60 days overdue. 40 to 59, you're 61 to 90 days late. 20 to 39, you're pushing 120 days. And really receiving that 1 to 19 score is you're constantly over 120 days late. A big problem is, we associate a lot of times that we could have, 30 days like personal credit to pay some of these bills, when actually 1 day late could really burn you. So you want to be careful about making sure that your payments are actually always coming in early. Next, you're going to have to monitor your credit report. So business credit reports are not always perfectly correct. Every major credit reporting agency is committed to accuracy, but you won't know if there's any errors unless you monitor your business credit reports. You can monitor your business credit reports at both Dun & Bradstreet, Equifax, and Experian through different resources. We use Nav, getting plugged into the Wise Guys and Ties. We can help you do that as well. How to easily build and monitor your business credit and improve your fundability and get financing, because you may be asking yourself, okay, wow, Ray, you're throwing a lot of stuff about business credit scores. How much of this do I really need to focus on? How much do I need to pay attention to? Well, I need you to understand that there's a lot of different models out there that have different barriers for different products. And so for your specific situation, it depends. And so that's why I always recommend people reaching out to us. Let's see what your business is, what your goals are, and then we can help you evaluate which direction is the best for you to go in and to get that funding that you need. You can go over to wiseguysandties.com. You just put in your email address and you can grab a free business credit building guide. It's a resource to you. But if you also want help, if you need a step-by-step process, let us help you get the money that you need to grow your business. So when you enroll in our business credit building program, you get 24 access to your own business finance suite. You get access in English and Spanish. You have business advisors to help you coach you through the process. You get Joseph and myself and our team. You get a 1 hour coaching session with Joseph Smith, or you get an hour coaching with myself. Also, we help you set up your business name, entity, EIN number. You help with address, phone number, toll-free number setup, help with your fax number, because that's important, getting into the national 411 directory. We help you with setup of your website, your email address, licensing, other online listing compliancy checks that we will do for you. Help with setup of your bank and your merchant account. Business will help you set up your reporting bureaus, Dun & Bradstreet, Experian, Equifax. What do you say? What don't you say? Getting a DUNS number, because all these things actually are free. We'll help you get those done for free. Your BIN setup with Experian, dispute and fix business credit inaccuracies. There's not a Fair Credit Reporting Act that will protect you. So we will help you go through that process of correcting any of these inaccuracies. We have the largest supply of starter vendors, including exclusive sources, well over 100 accounts that you can get without using your social security number, because that's what it comes down to, folks. If you're going to use your personal credit, use it strategically and the right way, but also you're going to need to make sure that you're building your credit so your business can stand on its own. We're going to get you the hard to find cash credit auto financing with no social security number, with no personal guarantee or credit check. Massive selection of retail and fleet credit with no personal guarantee. Unsecured financing with 0% rates for startups. Like I said in that financial blueprint, our hybrid credit program right now, where it's a credit card with checks, 0% up to 18 months right now. Asset-based financing with rates 2% or less. That's absolutely amazing. How can you get the money to grow? Well, when you start working with us, I mean, you're getting over $12,000 of value plus an additional over $5,000 of bonuses. That's $18,000 of value. And you can get started today as part of this webinar for only a one-time payment of $2,497, where our entire team is going to be holding your hand through the process to get you to $50,000, $100,000, $150,000 in business lines of credit. And so you may be asking yourself how to get the money to grow your business. Well, it'll typically take you anywhere from 18 to 24 months to do this on your own. You totally can. But what you can do with us, we're going to get this done for you in hopefully 6 months. We say 6 to 12 months. You know, it depends on if you already have a business set up or you got to start from scratch. Right now, things are moving a little bit slower due to shutdowns, but we can still get that done for you in 6 to 12 months. Save yourself some time. Get access to $50,000 in the next 6 to 12 months, because I'll tell you what, right now they're restricting lending on your personal side. We're seeing personal credit scores dropping. Experian just put out a new model that's dropping personal credit scores. They're making it a lot harder for you to access funds. And going into the next few months, personal credit and access to personal credit is going to be extremely difficult. But what are they still opening up? Business funding. They have right now about 280 billion. There's so much money that is available to businesses that are willing to go out there and get it. So how much can that extra 18 months with limited to no money cost you? Well, not doing it now can cost you a lot. And you'll be paying thousands more for monitoring done in Bradstreet, getting into the 411, valuations, and much more. Save yourself the time and the money. Reach out to the Wise Guys in Ties so you can find out and understand how these business credit scores work, how to grow your business credit, and how to do it step by step with our hand-holding process. Give us a call today, 888-524-9273. Reach out to us at wiseguysandties.com. Schedule a free 30-minute consultation. We'll just sit down with you and see if this is the right path for you to take right now. Feel free to email us at bizcredit@wiseguysandties.com. Picture on the screen there is myself and Joseph Smith. We are the co-founders of Wise Guys and Ties. But I'll tell you what, folks, we're dedicated to you. We're dedicated to your success. We're here together. We're going to get through this together, and we're committed to helping you get access to the capital that you need to not only take care of yourself or your business, but your family and everybody else in your community. Go out there, be safe to one another, love one another, and remember that the true way to wealth is to go a business. I look forward to seeing you all on our credit banking mastermind tonight, where we're going to be going over some amazing case studies. Good night and God bless.